I want to tell you guys the secret of how I'm still winning with the trades I put on in the market crash. Because most people, unfortunately, had a distorted reality over the last 60 days. And it's harsh to wake up to a sideways market, a market pullback, because what was working typically doesn't work. You just can't buy chip stocks and keep making money every day. That's not going to continue to go up when the markets consolidate. So right now the markets went up for like 60 days and this is distorted reality. I'm going to be honest because if you just bought a leveraged ETF like TQQQ, you could have made a 100% return. So anybody that makes 10, 20, 30% in a month, it still looks good on paper, but again, what are you comparing it to? Because the markets went up 30% over 2 months. So with a good market, it looks good what our strategy's doing, what our tickers are doing. It looks like our system is the right system to keep using forever. But then the markets do this. They pull back, they consolidate, and then we're like, okay, well, that didn't work. That entry doesn't work. That ticker's not even that great anymore. Well, this is what we don't want is a system that is reliant on bull markets only. That's why I look for low returns that are easy to hit and are repeatable. Because if you lower the bar to win, you can win in a lot of different markets sideways markets, up markets, and down markets. In fact, we've had a win streak that is unbelievable that's been logged in our coaching program because we just shoot for lower returns. So let's go through how we're adjusting, how we're adapting, and how we're still able to put on a winning trade here and there. TQQQ is up $55, which is almost a 1% return. And we have a Soxel trade up $75, which is almost a 1% return. So it seems like easy money, right? If the markets are crashing, most people are losing, but we're just hitting two winning trades back to back right now. How's that possible? And there's some key adjustments I look at in this market that is mostly a mindset thing. So let's talk about the mindset game and the market crash. The first thing to understand is just going back to the market from 2011. I mean, this is a leveraged ETF. I think a lot of misinformation online is that leveraged ETFs are bad to buy and hold, but man, this chart says different. I mean, you could be up thousands of percentages just from doing nothing. So if we just layer on option selling, it's not that hard to make money because the fact is every pullback gets picked up, which is really the big issue with option selling, where that's the only flaw in our system is if you pick a ticker that doesn't recover. If you get into the markets too high and it doesn't hit that level again. But just look here. We survived a correction, a recession in 2022 where the leveraged ETFs completely came back to an all-time high. And if you were able to average in to keep accumulating, I mean, you would have made dumb amounts of money just from getting in on the recovery. So, option selling, we take out the risk because we don't take the loss. And if you can pick the tickers that avoid losses, that's the secret sauce. And that's just one ticker we use out of like 5 or 10 that I like a lot. But TQQ, we'll go over why this is so special today. The number one thing, again, is to realize that pullbacks get picked up. We're in a pullback, we're in a sideways move, it gets picked up. I mean, there's not many times the market would can continue to crash for like years. I mean, 2022 was an anomaly. You can recognize that stuff if you look at certain other macroeconomics, but dang, I mean, this is just not the base case. Typically, you pull back, goes up, pull back, goes up, pull back, goes up, pull back, goes up. And this is what we expect. So this is the mindset I have. Again, mindset is key. Mindset is pullbacks are opportunities. They're not times to lower your risk, they're times to raise them. So here, this is the risk tolerant routine I do. If I'm down from the high of the market, every 5% dip lower, I want to keep accumulating. I want to get more positions that are not just selling puts, but really positions I can buy and hold because these are positions that have 20% upsides, 30% upsides. So I look at the mindset of the market as, hey, can I own this? Can I own something? Can I pick it up? And if I don't pick it up and I option sell, I still make the income. So it's a win-win because you look at the market and you say, I want to own it. I want to own it because the upside is tremendous if I got assigned. Well, here's the thing. When the markets pull back, you do not sell puts until you get the deep pullbacks, right? You want 5% down days. You want the RSI at the lowest point in the last 2 weeks. I mean, RSI at 46, RSI at 50 is pretty low compared to 70 where we were at. So we're cheap from RSI, we're cheap from the high, and then we're cheap from a daily candle drop. That's exactly the framework I gave the students on Tuesday when we entered in this trade. The beauty was I kind of switched it up. I have a standard option I sell. I went shorter term. There's a reason for this I'll go over later, but basically I look at a 2% put 15 days out. And if I look at this math, I'm going to own this asset TQQQ at 61. Here's the reason why this is so incredible. I make 2% in 2 weeks, or I own it at 61. I'm still collecting the premium, but 61 is down here. This is a 30% drop from the highs, which is pretty much a standard pullback in the markets. If we go from high to low, 30%. So you're kind of eating the bulk of the risk because of that option selling safety factor paired with the safety of the dip already coming at 20%. So if you look at the risk of any trade, it's, I'd say 30, 40%, especially if it's a leveraged ETF like the ones we use. That's the risk. If you have a 20% drop, half the risk is gone. If you sell an option 15% lower for your entry, most of the risk is just deleted. So I look at this as just a no risk trade, because if I got assigned, that would be my greatest gift of the year, because I would have a 60% upside if I get in at, well, let's say 50, 60, 40% upside. And then you can maybe leave it to run to an all-time high. I mean, it could be 100% compared to the last pullback. The point is, this is a time to look at the markets differently, put your mindset in the right place. The reason why I'm making this video is because we're still winning in a tough market and most people are struggling. So I want to help you guys win. It comes from number one, strategy, number two, mindset. That's it. And this type of trade, we know it's already up, it's already profited. We're going to let it run a little bit longer and we're probably going to get out. But keep an eye on the markets. Keep an eye on the second channel. We're going to keep you guys updated on how we're rocking it, what we're looking at, and I'm going to get you more and more content frequently so that you can keep learning at a high level with us on option selling. Peace out, everyone. Have a good day.